Hi, welcome to BuyPointASX. I'm Mac in Oz. So today we're catching up after a bit of a break, and the subject matter of today's video is really a bit of a refresh and new start. The whole process of trying to provide worthwhile advice about investing in the stock market was thrown into chaos earlier in the year when Donald Trump started what has to be described as a fairly deliberate campaign of chaos with the introduction of his tariff scheme. The title of today's video, Can AI Read Trump's Mind?, is really meant to focus the attention of viewers on what seems to be the big question as far as stock market advice is concerned right now, which is, will all human stock market advice be replaced or superseded by AI? And this is really the fundamental question, I would suggest, in terms of providing stock market advice, because what stock market advice has to be useful is a projection of what's likely to happen in the future. And as we have seen in the last few months, what's likely to happen in the future largely depends on what is on Donald Trump's mind when he gets out of bed in the morning. And my suggestion is that AI has as little chance of being able to know that in advance as I do, or perhaps as Donald Trump does. So let's get back to the basics. Here is the chart of the ASX 200. And what you see there is a trend line drawn over the basic price action line with a couple of lines drawn to show the recovery periods that were required to overcome the effects of the GFC and then of COVID. But perhaps the most important thing of all is that no matter what happens over a long enough period of time, the stock market chart continues to move up and to the right. Here we have a bit of a focus on what's been happening since the end of the global financial crisis, which you have to say makes COVID look like a bit of a blip in the longer term. The point being that the rate of acceleration, the rate of growth since the GFC has been at an even steeper angle than it was before. So there's still money to be made in the stock market. So here's the fundamental problem. Donald Trump is going to be around for another 3.5 years. I don't know what goes through his mind. I have some ideas about why he's doing what he's trying to do, which I will talk about more in the future. The point is, for the moment, we have to get back to basics and simply approach investing the best we can with this guy in charge. We've already seen the development of the idea of the taco trade. Trump always chickens out, but whether or not you can rely on that going into the future is just as much an open question. So let's get back to the basics of what BuyPointASX is all about. BuyPointASX is about identifying the best time to buy stocks that you're already interested in. The purpose of the channel is not to provide fundamental analysis. It is not to provide specific advice about what shares you should have in your portfolio. The purpose of the channel is that if you see a stock is being discussed in any particular video for the day, that means that, in my humble opinion, that stock is approaching an optimal time at which to either buy into the stock or to add to your current holding. That is done by reference to what I have identified as the single most reliable indicator as far as stock market charts being concerned, that being the MACD, the moving average convergence divergence formulation, which is what you see here, the MACD and the signal line. This is a graphic from Investopedia, which, as you'll hear time and time again, I regard as being essentially the self-directed investor's Bible. And if you want to know more about the MACD or candlestick charts or anything else, this is the place that I would recommend that you start. The other fundamental thing that I'm suggesting arises thanks to the chaos that Trump has caused and will go on causing is that you may have seen commentary about how the American bond market has been thrown into disarray, not only by what Trump is doing, but by the way that he is doing it. What that means is that my focus is on gold stocks because there used to be, before Trump, two popularly acknowledged safe havens, US treasuries, bonds, and gold. Since the bonds seem to have become shaky and will probably remain that way, if you're looking for a safe haven, my suggestion is that over the next few years, gold stocks are going to be the go for you. Okay, back to actually talking about what BuyPointASX videos are going to do. As I've said, the primary focus is on the MACD. And on every occasion that you turn on a BuyPointASX video, what you'll see is discussion of the situation with the MACD on the particular stock that I'm talking about. The other primary indicator that I use is what some people, TradingView, call a simple moving average envelope. And that's what you see here, the 20-day simple moving average, the 50-day simple moving average, the 100-day simple moving average, and the 200-day simple moving average. And the significance of those indicators will become apparent in combination as we go along. The stock that I'm talking about today is NCSCALI, NCK, in the ASX 300. And this is another basic that I will be reverting to in the time of the Trump chaos, which is to invest in stocks which have a long and sustained history of growth. This is the trend line, and you can see that while there have been setbacks like COVID and the recovery from the overreaction to COVID, the trend line is clear, and rather than investing in stocks that are either relatively new to have a trend line, or who have a trend line, or which have a trend line that goes all over the place, what I'll be looking for moving forward this year is stocks which have the low point down here and the high point up here, because that's the kind of long-term price action that we want to see. Focusing a little bit more on NCSCALI, what we're looking for in terms of trend trading, which is the kind of investing that I am advocating through this channel, is a trading pattern. You can see here that there is a trading pattern described by the high point from 2017 through to the high point in 2025, and the channel that you can see by linking the dots. Now, where there is movement outside that sort of channel, if it can be attributed to some sort of black swan event, COVID, reaction to COVID, the supply chain problems that happened after the reaction to COVID, they can be dismissed. What we're looking for is action within that channel, and Nick Scali certainly conforms to that pattern. This is the MACD chart, and for people who were watching the videos during my initial test run earlier this year, you'll see that I have moved over to a candlestick line rather than the simple price action line. I'll be talking a bit more about that in a moment, but here's the MACD. Here is the simple moving average envelope. These are the indicators that I use to make recommendations as to what is a good point at which to buy any particular stock. Here's a close-up of that same chart. Now that you can see the actual candlesticks, you can see how they can be useful, although I regard them as a secondary tool in terms of confirmation of buy points. We'll get more into candlestick analysis as we go ahead, but what you will see here is that the MACD is moving below the zero line towards a new buy point. And this is where we get granular, and this is the level at which the candlesticks are going to make a difference in terms of day-to-day confirmation of movements in the price action chart, movements in the MACD chart, and movements in the simple moving average envelope. Now, just to finish off with another more general observation, this is a pattern that I'll be suggesting as we move forward is going to become very prevalent in the relative chaos of the Trump years. And what this describes is what I'll be suggesting to you as we go forward is now a very familiar pattern, especially with the advent of trading bots, just to get back to artificial intelligence, or as I sometimes call it, man-made stupidity. What we're seeing these days is that when something negative happens to a stock, there is a massive reaction, a cliff drop. In this case, with NHF, we had an 18% drop in one day. Now, the fundamental rationale behind this kind of cliff drop buy point analysis is you simply have to wonder what could possibly happen to an ASX 200 stock, which could genuinely devalue the stock by 18% in an instant. My overall underlying suggestion is that that kind of price overreaction provides a very lucrative and repetitive opportunity for trend traders. The other thing that you will see is that the cliff drop buy point sequence indicates 5 different points at which you can take this pattern as a guide for when you should buy into the stock. The classic buy point is where the signal line crosses above the MACD line, and that is that point here from below the zero line, and that's where that point falls on the price action chart. Nothing on the actual price action chart itself to indicate the significance of that point. It's all about the MACD. But what you then see with the SMA envelope is that there are a series of 4 more buy points indicated by the interaction of the price action line and the 4 lines of the simple moving average envelope. And that occurs where the price action line cuts upward through one of those simple moving averages, followed by that simple moving average line moving up. So at this point, you have the 20-day simple moving average and the 50-day simple moving average being cut through by that rising price action line here. Then you have that happening again with the 100-day simple moving average being cut through by the price action line. And then you have this point where the price action line has cut through the 200-day simple moving average. And you see the growth that comes from here. And you see that if you feel confident that this kind of price drop is an overreaction, if you are less risk averse, you can buy in here. If you're slightly more risk averse, you can buy in here or here or here, with all that profit to be made. And when the price action line starts dipping downwards towards the zero line, we come again to a natural MACD buy point. So here's the disclaimer, which I've rewritten a few times, but once particularly since Donald Trump's impact on the market became apparent. Please read it. Please take it in the spirit in which it is intended, and I'll see you again soon.